Hello, it's time for another installment of Romeo CRT 2023 trade review. So today I'm going to be reviewing the fourth trade. This is going to be a Euro USD Forex short trade. Romeo took this on the 2-hour chart. It's kind of a scalp. It was on February 27th, 2023. So what we can see here is he doesn't really show the left side of price, but there was a really pronounced bear, a bearish move in price. But he does have the draw on liquidity, and he also has a stop loss, and he also has a kind of a grayish rectangle in the first price chart to the left. So the bottom of the grayish rectangle is at 1.63 or so. And so here's the thing. This gray, what we're going to do is we're going to investigate where the gray rectangle is from. We're going to talk about the turtle soup that we see in this chart. We're also going to talk about risk management, and particularly different forms of dynamic risk management you can use. I have been using in my trading a little bit of dynamic risk management, though I'm probably not as strict as I should be with it, but I'm going to show you some dynamic risk management today. Dynamic risk management is basically saying when you're moving your stop loss to break even, when you're taking profit off the table, when you're basically like paring down a winning position and letting the rest run. Basically making your trade into a risk-free trade, so to speak. So let me go to FX replay now. So here you can see on the left there is a very pronounced bear trend in price, and you can see that we have our low resistance liquidity run, our LR, and it's basically making a descending trend line and with lots of liquidity above. And so because of the inefficiency of this bearish move here, and we're talking about like the candle close of a month, so we're basically heading into the last trading day of a month as well, so there's that to consider. Let me zoom out just a little bit, or not really zoom out, but just like show you. So we had, just to give you like a lot of context, in Q4 of 2022, the euro actually broke parity with the dollar. Like it not just breaking parity sounds like it was a peg, but it went below parity. In other words, for the first time since the inception of the euro, decades ago, in 2022, the euro was worth less than $1. Very unusual. And so lots of regulators intervened. We've been talking about it over the course of analyzing some of these other trades from this time period. But you can see that there's this kind of, speaking of LR, there was a very consistent, linear, exponential at times, but, reverting back to a linear envelope here, bullish expansion in price all the way from below parity to $1.10, which is actually above, actually, no, it's still below where we're trading now, but it's a very impressive rally off of those lows, and you can imagine that there is lots of inefficiency, and just so you don't have to imagine, here's the chart up until that point. So you see a very pronounced weekly fair value gap right there, and then one other weekly fair value gap there. But at the point of this trade, we've already filled that in. We've already kind of covered that with some bearish, tapping into the sell side liquidity once more. So we're going to go to the daily chart, and what we're going to see here is there's going to be a new low of this candle formed, and then we're going to get a bullish turtle soup, and we'll actually trade above the high of this candle. So this is essentially a daily bullish CRT to get us up to that block there. Now, what is that rectangle? I'm borrowing that from the Romeo chart that we just looked at, but where is that from? Well, there's actually kind of two places where it could come from, and both I think are equally acceptable. So the first place is there's a bearish breaker. So this swing low here had a the final down close candle on this swing low makes this breaker there. And then the second place that that rectangle could come from on the 2-hour chart here is this up close candle. So that up close candle makes a bullish, a bearish order block. That up close candle makes a bullish order block. That 2-hour candle right there. So what we're going to see is we'll see that daily turtle soup coming above the highs of the daily candle on the 23rd, and then that itself makes a large up close daily candle that is a prime candidate for a bearish CRT. So here's what we're what we're gonna do is we're just gonna try to play this back, and you might be asking yourself, well, why is that the key level for this reversal? You've got this breaker here. You've got, or you know, a kind of an old order block. It's more precisely an old order block. Then you've got another swing low there. So pretty interesting, and also a balanced price range, a BPR there. So lots of good places to reverse off of. I'm going to play this back nice and slow. What this trade ends up being is, it ends up being a very quick bearish scalp in the middle of a bullish turtle soup. So it's essentially like if you missed the bullish turtle soup and you're looking for just a bearish scalp, or if you're convinced by how bearish this price action is and you're fine with like basically it leaving a little bit of inefficiency off the table, then you can take trades like this, provided that you use that dynamic risk management, and basically truly treat them like scalps and not marry them. And you'll see why in a second, why you don't want to actually like marry this trade. I'm hoping to use, so I'm on FX Replay right now, and I'm hoping to use their like sim trading functionality. Oops. Okay, 1 second. Let me just pause this for a sec. Okay, we're back now. So here we are at the 50% of the bullish CRT. So basically you see a pause, and then our entry is actually going to be more towards like the 618 fib of the bullish CRT. And what we're doing is we're just looking to turtle soup and get, so there's going to be like a large 2-hour candle that's going to form, up close candle, and we're basically just looking for a turtle soup of that 1 2-hour candle. And I'll show you how to use the dynamic risk to reward management if you thought as Romeo did. So when Romeo published this trade, he had his eye emoji. He had that here. Wow, that's a large one. But yeah, so he put his eye emoji down here. And so he's thinking this is the draw on liquidity. There's going to be an entry up here. We're going to turtle soup these highs, essentially. So we'll get a big, large up close candle, and then another candle opening, but it doesn't ever close. It closes like below. So that'll be like our, kind of like 2-hour time frame signal. I actually want to drill down to the 5-minute chart as well to get. So here's our large up close candle forming. Actually, I'm sorry. This is the large up close candle. And look at the timing. So we're basically in late London session now. Well, the late London AM. And so now we're in like the pre-NY AM, like the crossover between London and New York. It's the 9 a.m. 4-hour candle and the 9 a.m. open that becomes the actionable trading hour here. Okay, so here's our large up close 2-hour candle. This is what we're looking to turtle soup. You can see all the inefficiency in price, right? So here's a 2-hour fair value gap, here's a 2-hour fair value gap, and here's a 2-hour fair value gap. So essentially you've got 3 consecutive fair value gaps in a loose way, but you've got 2 fair value gaps that are consecutive that are very close to one another in terms of time. So this candle is actually going to become the wick with a large bearish reversal. And it's because, so here's the relationship between the turtle soup candle, or sorry, the CRT candle and time. So, lower time frame, the lower time frame entry models essentially. So if we go back to our 2-hour candle, which it's kind of funny, the 2-hour candle and the 4-hour candle there have more or less the same range. Actually, I'm going to use I'll use these lows here, and then I'm going to use these as the highs. And so with my 2 light gray lines there that I've just drawn in with segments, this is essentially this little mini turtle soup that we're going to trade. So what we're going to do is we're going to watch for a 5-minute model number 1, and actually we get like a perfect 5-minute model number 1. So this is the candle right here. That's your last up close candle with a decently large body. It's a swing high. It's within this order block that we've already identified. It's also within the previous breaker, or just beyond the previous breaker that we've identified on the 2-hour chart. And so I'm actually going to execute this. So I'm going to get a little slower. I'm just going to sell 1 lot. I think our sim account right now is in FX Replay is a $100,000 account. We're going to go a little slower. Hope you don't mind. We actually get a really good like stab into that 5-minute fair value gap there with that bullish breaker. And that is going to be a kind of a signal there to watch for an entry. In other words, like this very convincing market structure shift. Is it a true market structure shift? Some people might have more strict, like if it did close. So if this is the high and this is the candle that broke the high, we close below the candle that broke the high. If you're looking for like more of a swing low type of approach, we haven't hit the swing low, or we haven't closed the swing below the swing low yet. But yeah, so I'm going to pause it as soon as we get into our 5-minute Romeo order block here. Okay, right there. Now, Romeo has advised not to use limits. So this would be like a sell limit order. You could put it at the consequent encroachment of this order block, right? Like at the 50% fib of it. I'm actually just going to tap sell here. I'm going to sell my one lot. I'm going to make my stop loss the stop loss that he originally had on his chart. So I'm literally just like miming his exact order, his exact trade frame that he's outlined for us. It ends up being like a 4-to-1 risk to reward, a little bit better than a 4-to-1 risk to reward on the trade. I'm going to put my full, actually, you know what I'm going to do? I'm going to enter twice just to make this easier to do dynamic risk to reward management. Dynamic risk management. So we'll enter 2 of those. We'll get 2 of those trades going here. Let's see if I can. Oh yeah, beautiful. So I'm going to put my other stop loss above there. So you can think of a stop loss like an invalidation point, right? So if price trades commandingly above this line here, which, you know, it's probably the 75% the way through this overall range here, then that's basically invalidated your this. So Romeo is basically operating on the idea that, yeah, we had a bullish turtle soup, a bullish CRT essentially of this range, and we are rather than trade from to the final target, which is the high of the range, we're going to turtle soup, and then we're going to trade back down to the lows. So in other words, it'll only be a 50%. That's essentially like his operating theory, or his like working theory, or making this trade possible, right? And then what I'm going to do is I will put one take profit at the lows, that 1.0532, and then they also have a place to take partial profit. That's good. I'm going to put one down there, and then I'll just use dynamic risk to reward for the other one. I'll just use a dynamic target. Basically, what we'll be doing is I'm actually going to delete this. Boop. We're going to be watching for the 50%. We're going to be watching. So like if we, we might turtle soup these 2-hour lows. Right, and we're going to be watching those really closely to take profit off the table and then move our stop loss to break even. A lot of times you can use the 50% of the overall, like from the trip to, so you can use this 50% fib here as your first take profit line. We're going to be like a little bit more conservative, and we're going to take half of our profit off there, and we'll see what happens. I believe if we look back through the on the PowerPoint, that price actually does get well below that initial 2-hour candle into the 2-hour fair value gap. So I'll show you which fair value gap we're talking about. So we'll go back to the 2-hour chart. So here's the trade. It's all framed out. Here's the 2-hour fair value gap, the first one, and then here's the second 2-hour fair value gap. So this, by now, your eyes might be accustomed to looking for these turtle soup entries, but this is a bullish turtle soup entry that occurs at 50% of this range. Okay, so just below the 50% from this swing low to this swing high, there's another entry that'll occur. And so that could be a place where you look to take those initial profits off as well. So yeah, actually, you know what? Maybe I'll make this. Maybe I'll do it textbook. I'm going to do it textbook. I'm going back on what I said before. So I'm actually going to take my initial profits. I'll take one lot off here, and then I'll move my stop loss to break even. So just letting price play out now that I've entered the trade, and we'll go back to the 5-minute chart. Here we have our retest. Then we're going to have a wick above, which gives us a little bit of drawdown, and then we'll have a commanding close below and a dump. And you might be looking for, like if you don't want to just take this one market structure shift and kind of like take that to the take that as your trading approach, you could be looking for like another market structure shift occurring below this swing high as well. So like that down close candle that closed below the low that broke the high, and that is a swing low there. So that right there is a 5-minute market structure shift. And then if you entered, you could enter a little bit lower, and it would be probably a better and more conservative entry. With probably a higher probability of success overall. But obviously we're trading hindsight, so we can use a pretty aggressive entry and still get away with it. I'm going to hit pause as soon as price stabs into this. Actually, there's probably a way I can do this, like put the order in. Let's see if I go to place order, and then can I sell at a limit, or sorry, it would be a buy limit at 1.0587 right there, and then one lot. Can I do that and have that be a have that act as a take profit? Maybe it might work. Maybe it probably won't though. See, in my futures trading platform, it would let me do that. It would say like, it would know to tie the, it would know that I've got like essentially like a two lot short going, and it would let me put a buy limit order in that would effectively act as a take profit for at least half, for half that that 2 contract short. Obviously, with futures, you're trading 6E rather than the EURUSD spot exchange rate, but it's the same idea. Yeah, so it's kind of funny. I mean, it like this to my eyes looks like a little mini kind of turtle soup type thing. The hesitancy here is interesting because it's like at the 50% range of the range we're about to turtle soup. So in other words, we're about to have a bullish turtle soup below these lows. I mean, it does look really inefficient. I mean, it was Asian session here with like no volume. It's just kind of continuing to trade lower. I'm just going to give you a picture on the 2-hour chart now. So here we have, this is starting to look like his picture, right, with like the long wick. And then we'll end up like targeting these lows here as our first. That's our first take profit there. I'm hoping it doesn't enter me into the buy. American Forex brokers usually don't let you have a long and short position on the same asset. Let's hope it closes my open short, or at least partially closes it. Look at this like false market structure shift, like right above the key level. Okay, so we are now. Oh, it did. So it's up. It's working like a It's working like a European broker that would let you have the fully hedged position, I guess. But anyways, what we're gonna do is we can take partials here, right? So we can say 50% at 1 point. Is it working? Okay. Shoot. I hope I wasn't recording too long without the sound. Anyways, we've hopefully now you've watched enough videos to where you can see this as your bullish turtle soup setup, a potential bullish turtle soup setup. And why are we due for a bullish turtle soup? Well, you know, simply in liquidity terms, I mean, you can see that there's more LRLR. This breaker might have been more meaningful than probably Romeo originally thought with this for this specific scalp. I would still consider this trade a success. This bearish 2-hour scalp still very much a success, right? I mean, we've essentially taken half our. Well, it doesn't end up working out as half. Like it ends up working out as 1/4 of our total. No, I guess, yeah, I think it's a third. It ends up being a third of your total profit potential when you do this dynamically like this. But yeah, so let's look for a bullish 5-minute entry at this key level. Isn't that interesting? So so we actually closed the daily candle right there. And this is the open of a new daily candle. So we'll probably turtle soup these lows. If we don't, then clearly there was like some sort of news event or other considerations at play. No, yeah, so we do. So now this is still pretty textbook, right? Because we have essentially this like opening range. I remember way back in the day, ICT would call this the like central bank dealing range or something like that, where it's basically like these no man's land hours between 5 p.m. and, you know, we'll call it 8 p.m. Eastern Standard Time. So it's like pre-Asia Open. But yeah, so look at that. So we have like a lot of inefficiency here with multiple bearish fair value gaps. And then look at all the volume. Like we're all of a sudden getting a lot of volume, like the candles, the price is like jumping around within the 5-minute chart. You can already tell that this is going to be a really active Asian Open. And right at the Asian Open at 8 p.m., we're going to be looking for a bullish entry. So there's your 8 p.m. candle, that little doji right there. And then this is when we start to look for entries, right? So if that's a down close candle, swing low, there's no wick there. It's kind of inefficient, but we have a close above. And now, so multiple different chances here to enter. Oh yeah, so that would have been an awesome entry, right? So right off the key level before, do you see how we closed above and then we kind of wicked into that? That's a nice little entry. Closing above the high that broke the low, enter long and target the top of this range. Our stops are already at break even, are they? Let's see. Not a stop loss? Yeah, so there's another. Yeah, I just got rid of that one. That was kind of confusing, but we should only be like, this is so funny how like clunky the interface is. I'm probably like using this wrong, but it doesn't really show you, 0.5 positions, 0.5 lots on this spot forex position here. So obviously, like when you're a trader, this is like where you're watching your like potential profits essentially dwindle away to your break even, but that's okay. I mean, you've already taken a pretty good chunk out of the market. And yeah, so if you were bullish, I mean, you could discretionarily close your trade on the bullish entry and get long, if you're like scalping. Depends on how much bearish conviction you have at the moment. But yeah, it's going to trade right back up into the break even. I'm going to go a little faster now, just because our trade's pretty much over at this point. Boom. So overall, we had our half of our profit. We reached essentially that 1/3 of potential profit, where we closed half of our position at half the range target, which works out to 1/3 when you do the math. But yeah, so we do have that retest with equal highs. I mean, that's looking pretty bullish at that point. So I'm wondering if it was like news or what. Again, I mean, we were really bullish on foreign FX at this point. So, but yeah, that's pretty much it for that trade. Let me just go and reverse engineer that trade one more time just to make sure I'm not missing anything. So it's essentially saying like, just to use here, I'm gonna get rid of everything and just start fresh from scratch. So it's essentially like we're trading down and we like dump below that low there, and then we go and we retest it, and then we dump again, and there's like 2 fair value gaps, and then we continue trading lower, and so this whole range here already, the market makers that be are thinking, okay, well that's essentially inefficiency. Like we're trading bearish so quickly and so linearly, like along a linear envelope there, that we're essentially leaving buy side inefficiency, right? And so let's just check to see if we have a daily fair value gap there one more time. We do, yeah, we do have a daily fair value gap. Nice. So again, we've left behind the daily fair value gap. We've left behind the low resistance liquidity. And so it's a prime target, and just training your eyes to recognize these turtle soups. So it's the low of these two it's this swing high here of that further stab, right? And so it's like, let's go to the 4-hour chart. Yeah. So what I'm seeing on the 4-hour chart is we close below, we trade up, we retest, we close even lower, right? And this is like the candle that begins the range, and you can start counting the candles. 1, 2, 3, 4, 5, 6, 7, 8. And then we turtle soup that 8th candle in a bullish way. And then from the final candle actually, you know what? I'm on the wrong time frame. I'm going a little bit too. Yeah. See, on the daily time frame, it's kind of funny. It's too quick on the daily time frame to be like my comfy kind of like you know, it's kind of following the turtle soup pattern that I've been looking for. But let's try the 12-hour candle. Yeah, so it looks a little bit better on the 12-hour candle. So in other words, we begin the range there with the break below that low, right? Or the break below, close below that low. So we have 1, 2, 3, 4, 5, 6, 7, 8. Beautiful. So that's what I always try to look for, is like when price is consolidating, I always try to see if I can find a time frame where it's like between 7 and like maybe 12 candles that you get from the, like, using the initial candle that forms either the range, it either forms the range high for a bearish turtle soup, and it either forms the range low for a bullish turtle soup. And these things always occur, like these turtle soup setups, they always occur as like these continuation plays after a pretty significant trend. So in other words, the pattern goes trend into range, and the range ideally is occurring after the trend, right? So at the extreme of the trend, after lots of inefficiency has formed. And so, you know, the algorithm or market makers or whoever is looking at this and deciding is saying that's all very, very inefficient, right? So what we're going to do is we're going to allow price to continue, and then we're going to essentially force an accumulation with a final manipulation, and then the distribution can continue. So that's my idea of, well, it's not my idea. I'm hoping that's Romeo's original idea of these turtle soups. So yeah, it's nice if it follows this pattern. So yeah, I don't think there's a lot more to look at, but I think if you had one takeaway from today, it would be the idea of dynamic risk management and taking partial profits at the 50% of the range. It works with CRT, and it works with doing these range turtle soups. Really, really simple to manage, and you could even code it probably, like if you wanted to like let a robot take care of it for you. I personally use Quantower, but I haven't messed around with the coding. I've been trading for a while, so I actually started trading on MetaTrader 4, and MetaTrader 4 has one of the best, in my opinion, programming languages for the Meta platform. It's called MetaQuotes Language 4, MQL4. I mean, it's really readable. It's really nice. It's very accessible for human coders. It's based on, I think, like C# or C++ or some form of C. But I've dabbled in it. I've dabbled in coding indicators and coding expert advisors and all that. I find it to be really, really nice. Though now I'm trading futures, and I trade on Quantower, and I don't think that Quantower has the API has. It doesn't really look like it has a lot of documentation or support or people trying to code. But I mean, we live in the era of AI, so you could either code it up in MT4, use a bridge, or you could code stuff like your automatic dynamic risk reward management routine. You could code it in MetaTrader, MetaQuotes Language 4, and use a bridge to Quantower, or you could just code it right in the Quantower API. But yeah, so I'm looking forward to making the next video. Thank you so much for your time, and have